these valuations continue to be very elevated. It comes from a few things. One of them is the fact that we did see that tech rally. And then we also saw the fact that AI had an exponential sort of tech rally. So it's one piled on the other. Then there's the fact that there had been a significant amount of dry powder sitting in the market from both some institutional investors in public equity and especially in private equity and venture capital. You combine just those three things and you start to get a lot of that foam coming right back into the market. The question is, where are these valuations going to go in a year? We're not quite sure. What we can say is about 100 times earnings for this sort of opportunity is, in fact, very frothy. But the market seems incredibly optimistic, even in this high interest rate regime. So it is going to be interesting to see what happens when more capital starts to come back on the market, when interest rates starts to turn down, and holding on to cash is less attractive again. But in a market where investors are trying to capture growth, where it does seem to be the most of a sure bet, I think that is actually contributing to these really stretched valuations in a way that seems less intuitive, but AI seems to be the surest bet. I think a lot of investors are looking at it.
Shelby, what do we now think about the IPO market? There was a view from the bankers that, look, there was a scarcity of stock when it came to ARM, even though it was a fairly large listing, had a whole ton of anchor investors in there, not much stock offered up to the common retail investor at this point. So what do we think in terms of what it means for the others following suit, the likes of Instacart, for instance?
I think what it does mean is that success for thee is not necessarily success for me. So there has been a lot of comparison of the ARM and the Instacart IPOs, looking at the fact that they are both tech adjacent. When we do look at the Instacart IPO, there have been some difficulties. There will be shareholders and stakeholders that do see more of a significant loss than a gain on this IPO. So it really depends on which side of the Instacart coin we're looking at. Then when we go ahead and look at ARM, as you mentioned, it's not necessarily all that we see on the surface. And they really are two very, very different IPOs. Yes, tech adjacent. Yes, I'm sure that Instacart is leveraging AI to better serve their customer. But the sort of expansion base that they're getting from the likes of, say, that NVIDIA sort of foundation are going to be significantly different. So when we look at the fact that there will in the future most likely be more of that ARM stock coming available for shareholders outside of the initial offering and institutional space to trade, that may be when we start to see that valuation come down. But my overall conclusion would be that there is not going to be one set success rate for IPOs for, let's say, the next quarter, next 6 months, or even the next few weeks. It is going to be company specific.